Hey, what's up, guys? I missed my broadcast yesterday. Got a little carried away with work, and then went out with some friends afterwards. But today seems like a very good day in the market. So wanted to just take a look at what has happened. Let's see. Let me see if we can get. I guess it doesn't matter if we have delayed data. It's all aftermarket, so it doesn't even matter. But all right, let's see. Today looks like it was a good day in the market for everybody. It was green. I coming back into the near 415. I think all time high today was a little higher. Let me close out of this. Seems like it's not loading. Bear with me 1 second. Reload my platform. Hey, Will, how's it going? Did you do it good today? That's all you need. That's all you need. Mm. Yeah, I saw. I happened to. I was able to take a look at Apple today throughout the day. Apple is doing really good. So when Apple is doing good, I know the market is doing good. Uh, yeah, I'm not sure either. I mean, but these things happen in the market all the time. We get yeah, maybe because it costs money to short. Shorting isn't something that you could do for long term because you're borrowing it from somebody. Yeah, they're borrowing it. Somebody got to get out. So when they do get out, that's when you see it. You see people making the money. Right? I'm thinking that's what it is. But today, hmm yeah, you see this right here, like the last 2 days. So this candle was today, right? And then so this candle was today. This candle was Thursday. So Wednesday was literally right at this 50 moving average. And I talk about this all the time where it's like clockwork. For SPY, it's just been respecting this 50 every time it comes to the 50. It just likes to bounce off. And I'm hoping this is the case with this where it just bounced off of this and it just keeps going higher. I mean, it is overextended on the monthly and the weekly, but the thing to keep in mind with charts is it's just a record of what people have been doing and what you know, and people's behavior determines the price of everything, right? If people are not getting out, and they think that it's gonna go higher. They're gonna keep holding their stuff, and it'll keep pushing higher. It's not like there's a predetermined line in the sand that says, "Hey, we have to get to this price, and once we get to this price, then we're just gonna all fall." Right? It doesn't work like that. The market is determined by all the players, and if the players are not getting out, that it's like a game of poker. More players at the table, then there's more to the pot that you could win, and that's how it goes. So the mar- st- you know it, right now it's just looking to me like there's nobody wanting to get out. Everybody's holding firm. So I mean, Is everything super high right now? I think so, but also the behavior of people is they're not just players are just not leaving. They're holding grounds. So, and a reason why I mentioned Apple earlier was because you can see here, this is the breakdown of SPY. So SPY is literally SPY is the ETF that tracks the S&P 500. You could say S&P 500 and SPY pretty much the same thing. The margin of error is only like 1% or something. So it's just a number. The 500 top holdings in the United States market, and you can see from that, the whole ETF. Apple is almost 6% of it, and the next biggest one is Microsoft. So both of them together, they're they're somewhere between that 11 to 12% of SPY. So if both of them go up, you bet yourself SPY is going to go up. And since SPY represents like basically the market, and when anybody who stock trade, you want to look at SPY to see what SPY is doing to determine if the market is going to be a bullish market or it's going to be a bearish market. So, why I always look at SPY is because SPY is literally the hallmark of everything, the standard that you hold it to. And when SPY goes up, and since Apple is the uh, one of the um, one of the highest position in SPY, you bet that Apple and SPY will go up together. You see, so Apple had a green day, therefore SPY had a green day. We can even say Microsoft too. We can take a look at Microsoft because Microsoft is the second biggest holding in SPY. So for anybody who is interested, you can see, Microsoft has been falling for a number of weeks, 2 weeks or something, and it's bouncing off this 50 again. So this 50 is literally like a magnet. Everything goes up from it, everything comes back to it, touches it. A good stock, a good trending stock, meaning a stock that has a price pattern that it follows, always comes back to this 50. And we see it's true for something like Microsoft. And the more something repeats, the more people pay attention to it, and the more people that plays it. And so it becomes this line that everybody is uh, paying close attention to. So it becomes more true over time. Eventually there is times where it break, like here, so 2020 global pandemic. But if we're looking at a pretty normal year, yeah, it really pays attention to it. See, so 2019 really pays attention to it. 2018 going into 2019 was a little rough up, but you gotta be able to look at these areas, these times where you just look at it and say, oh, this isn't normal for the stock. The stock isn't normal. So this is opportunities where you take advantage of it. And currently that's an opportunity for you, for anybody. This is an opportunity. And yes, it can go lower. It's not that this is imaginary line that, it just has to look at it all the time and bounce back from it all the time. No, it just means that this has been the pattern for a while, that it likes to hug onto it, likes to stay above it. But if it ever goes down to it, that's breaking character. And when it breaks character like that, you should be telling yourself, hey, how can I make that into a benefit for me? You know? And if you're just a person who likes to just buy and hold, or be a longer term trader, you can use it to your benefit. Some of these trends could go for months. You see here, this trend right here is still going on. You wouldn't have gotten stopped out if you got in here, here, here. You would have still been in. So things like that, you pay a close attention to. So Apple, Microsoft, more expensive, but I'm pretty sure positive that other stocks have the same pattern. You notice it. You just gotta look for it. It's from my watch list. One of my watch lists. I just keep a watches all these little stocks, little big stocks and everything. And you just have to notice the pattern at home. You see this pattern, same pattern again. It's hugging this 50. And when it's hugging this 50, it just keeps going. So you don't have to be smart about this. You know, this is as simple as you can get it. It just hugs this 50 and it just keep going. I don't personally trade home, but I keep it on my watch list just in case it starts making some noise. I think you can tell just from the chart that yeah, it does have times where it really trends, times that it kind of sucks to get into it. But these sucky times, you gotta look into it. You gotta be able to look at it as, hey, this is a time where I can really position myself to make a lot of money, and that's all you have to do. Don't wait for the hype. So ELY was doing really good. Unfortunately, for the I had to take my profits early because I sold puts. I sold puts at for the 31. I already collected about half of the contract, but I still had to take it early. And you can see this stock's been doing really well too. Been trading up for the most part. It's been going really good. I got in probably like 2 weeks ago when it was around 20, 28, 29. And this is just the pattern that I played. So right off this 50. There's nothing to it. I'm pretty sure you can apply this analysis to basically anything that has a price. All you have to know and why it works is you're just playing price action. You're just looking at price action. If you do a little bit more research on the stock, it definitely is going to help you more. But you could just be as simple as just playing the price action. Play with do your risk analysis ahead of time, know how much you're willing to lose, how much you can lose, and then just get in. Let's go with it. It's nothing complicated. You know, we make it complicated when we try to predict what's going to happen. We never know what's going to happen. That's why we just do our risk analysis, so we know how much we can afford to lose ahead of time. And if it comes back to that area, oh well, we take a loss and we move forward. Key point is just to not lose and just not lose so much money. Right? You want to lose a little bit and you want to win more. So to be a good trader is just a person. You just got to be a person that can control your losses and be able to recognize any patterns that occur. Take advantage of them. You could do research on this any stock. You know, it would be nice to find the next Amazon, the next Google, but those stocks come every once in a while. Think of it like this: the U.S. market is 2,000 some stocks, some 2,000 some big stocks, and only of those 2,000, only like maybe five or six are the ones who are actively traded, that are actively doing well, that beat the market all the time. So if you just look into that, the percentages is really against you. So just trade what you can, just have a plan for it. I'm not saying you can't try to find those. You're gonna burn a lot of cash trying to find them. So in that Neo, pretty cheap stock. It's energy related stock. I've been following these guys for a long time. They've been doing really well. They're coming down. So right now they're coming down. This is an opportunity. This is a hidden opportunity right here. A cheap stock that is, you know, that has been doing well for a long time. They're coming down, and if they get down to close to 30, right now they're at 38. If it goes down another $8, I think it's a great buy. Even if it goes down for the next year or so, I just keep on adding on to that position. Right? 100 shares will cost you if you get in at 30. 100 shares will cost you three grand. I know people who can blow 3 grand somewhere else, but if you put in something like NIO or NEO, Neo Geo, you can potentially get that money back and some. All-time high with the stock is 61.57. Great little piece. Uh, watch watch it for it to come down a little bit more. Definitely, this is a break of character. You can see this weekly chart. So we're looking for these break of character. So the characteristics of this stock has been that it's been respecting this 50 weekly. And oop, and it's been respecting this 50. So no matter how much it falls, you can see if it falls down like this again, just play this kind of pattern again, right? So it did break the 50 before, but as soon as it breaks this 50, it comes back to the 200, this yellow line, and eventually it comes back up. So this right here, this is just a few months of pain right here. But if in that few months of pain, what if you were able to sit through it, look at how much gain you had from, right? This few months of pain, it went from $11 to $7. But then from the $7, right? Even if you didn't time it correctly and get that exact bottom, you got it at 9, 10, or heck, even if you got it at 11. Look at the return. And this wasn't just a COVID play, because COVID was this right here. This was good since the beginning of 2018. That's when this trend originally started. So for 2 years now, it's been going. And so it's ideal that it's taking a break right now. But as it's taking a break right here, this is when you should start thinking, hey, if it repeats itself, I would like to be in that next run, right? Because they must have done something right for 2 years. And of course, it might not return to these levels again, but only we can tell. So continue to monitor it, and if you're not completely sure, it's okay to just sit on the sideline and watch it for a while until you're completely sure, right? It's not hurting you just doing that research and just looking at, just watching stuff until it's good to play. Or if you think that it could leave without you eventually, then slowly get into a position. Yeah, I talked about this time and time again, how you can just average down. You don't have to get your maximum position ahead of time. You could just slowly get in, because you could see if you are a patient trader, it could take months before something moves. If you're patient with it, that's a lot of time for you to get in. If you can get in and you have patience to stay the course, that's where the money is. So from 9 to 60, that's 600% for 3 years. That's pretty damn good. So you got to look at it like that. So this is a really a good one that guys should be keeping an eye on. I also have my eyes on it. It's on my watch list. NEO, they've been doing really well for a number of years. Starting back in 2013, been trucking it, and you know, a run that's that long, it's eventually going to come back. So you see this monthly. We were looking at the weekly from before, which a broke character. This was the run, 2.5 year run. But before that, you see, you took a breather here, and if this comes down, that was a 2 year run. Probably take another 2 years before it runs again, or another year. So you have a lot of time to add on. So if it keeps form and it comes back down to 30, 30 will be, you know, given. Great. We can keep this anywhere between here would be good. So 25, 15, and if it keeps form and it keeps going, be great, great, great investment. This is a speculative play. So this stock is a stock that likes to have a lot of cycles. see, it's just a cycle lasts a number of years, come down to its lowest. And so this is a multi-year kind of a multi-year range. It tries to break it eventually, but it comes down. So this is a stock that has a cycle. So if you can make sense of this, you can bank from it. And so from this right here, be questioning if it'll go down back to $10 or if it'll go up and try to break 150 again. At the moment, at the moment, you know, we never know. Asset inflation is about to blow up. Well, we've been saying that for a long time. We're not the first generation to say that. I mean, if it happens, there's nothing we can do about it. You know, if it happens, it happens. It's not like we can do anything about it, right? It's beyond our control. We just have to have a plan for it. Fastly, I remember hearing about this one. So if you guys are interested, Fastly is really low right now. Really speculative. Really speculative. Buy everything. If only I could. Yeah, if only I could, I would. Because I mean, if you don't buy anything, then you're not taking any risks. If you're not taking any risks, you're not making any money. So the part of taking risks, sometimes you get hurt, but yeah, you gotta take risks to make money. Uh, Halo. This stock has been doing sort of well. It just blew up, so you can see number of years that just led up to this. I'm not even sure. They do healthcare. I sort of shy away from healthcare stocks. They're too violent whenever they move for me. I mean, I know some people like that kind of volatility, but for me, it's just too crazy to just really know. So much homework to know what exactly is driving it. SPR. This is a cheaper. They used to be part of Boeing, if I remember correctly. They split from Boeing, so you can see from this chart and Boeing's chart is going to be very similar. Yep, very similar. 'Cause they split from Boeing. So if you guys don't want Boeing, but you don't have the money to play Boeing because Boeing is a pretty expensive stock, you can play Spirit. This isn't Spirit Airline. This is Spirit Aero System. So they do like aerospace stuff. They build planes and stuff. Um, Same pattern as Boeing. So pretty low right now too. All time high was 105. So a little bit more than double of what it is right now. But this is it's going to be a long out play. It's going to be long drawn out play. Um, within the next 10 years. If this thing makes a recovery, you double your money. If it recovers and takes off again, you have yourself a great position. Let's see. This has decent spreads on its option chain. So it's a very good thing. Um, especially if you don't want to buy it right now, you sell some puts, so you get the shares, or for the potential to get the shares. Basically getting paid to wait. You get paid to wait for somebody to assign you some shares, and from there you just take go on with it. Duke Realty. See, the stock's been doing really well. They got hit 2009, been recovering since. Already creeping up to its all-time highs. all times high was 48, 40, 48, 42. Doing really well. They're part of the RITs. So real estate RITs, they pay a dividend. So dividend's pretty good, 8.33%. Very, very good. Let's see. They are a quarterly payer. So you make a dollar return every single year. And I believe they've been paying that for a long time too. They've been consistently growing it, consistently paying out for a number of years. So this is a good stock, good low dividend payer. You're not gonna get 8% at most places. So 8%, if this stock is giving you 8%, imagine if you go, if just because we're in a bull market right now doesn't mean the bull market is gonna continue. So dividend players are really good if we don't know what's gonna happen, right? The market gets really low again. So one thing to keep an eye on, if it's too high for right now for you and slowly buy into it, just know that dividend payers do really well when the market, is bad. When the market goes down, you should be looking at those dividend payers because that's when you're gonna be able to pay, get the most out of all your money invested, right? So at $45 right now, it's paying 8.33%. So what if this stock gets cut in half? Right? That increased to a 16%, right? Dividend that you're gonna get back. So if the market goes down, you should be adding on to dividend stocks because that means you're getting more dividend payment than what the stock costs. So strategy that I know people run is, during good times they play growth stocks and let their dividend stock run. Then during bad times they start buying dividend stocks up again. And as they add on to the dividend portion of their portfolio. And so that when in good times, they're just collecting dividends from it, collecting the growth of that stock. And they're buying or trading growth stocks. And growth stocks, they grow way faster than dividend stocks. So they get the growth and the dividend and they get dividend payment. So lot of lot of wins there. So position yourself into win-win situations. OTech, open text. Look at the beauty of this yearly. Very, very good structure. So it's kind of struggling now, but if that thing comes back down a little bit more, be a good pickup. Nice and low. Smarts, smart sheets. Another stock that has a good formation of the monthly. Prices coming back. I would say if we are lucky enough for it to come back below 50 to 45, be a great pickup zone. Their earnings still negative, but like with a lot of starter stocks, their earnings aren't the greatest, and it usually isn't great until a number of years, until they establish their dominance, become the go-to. They make more. United Airline for people who are going to play the airline. Airline is another great one, but you have to be very patient with it, especially everything's recovering. Travel is opening up more. I wouldn't play United. I would probably play Southwest or Delta. The Southwest is already almost all recovered. 66 was all time high. It's at 62. Great bounce back. It has the laggers, laggers of the airline. They're just slowly catching up to their all-time highs. Things stocks like Southwest, that they're gonna be breaking their all-time highs and making setting new highs. So that's why I always play. If I had the choice in any sector, what I would do is I'll go to that sector and pick like the top 5 holdings in that sector and just play those. Limits down my research too. You know, as a trader, you don't really care about finding those big. It would be nice to find those big runs, but you don't need to all the time. You just trade for a few dollars, trade for a few cents. So that's also another way of thinking of it. Just gotta figure out what works for you. Delta. This is Delta. Delta is approaching its all-time highs again. So it's still like $20 or a little less than $20 short, but it's doing pretty well. It just has to its all-time high is at 60. So and you can see, right here this monthly chart. It's been it's been hovering in a range for a few years. And if COVID didn't happen, I think it would have tried to break it. So right now that it's all coming back, I think it might have the momentum to break this all-time high and go even higher. Delta's a good one. Southwest is a good one. Worth keeping a lookout for. DJ's wholesale doing really well. It's catching on. So looking for this to turn out like Costco. You know, another one, another stock in the wholesaling. You see Costco's been doing really well too. Number of years of performing, just performing. This is absolute return though. If you're the longer term you are, the more absolute you are. 'Cause you're not always giving money back. You're buying in and then getting out when it conveniences you. And you're making money. When you're in the greens. Right? Costco, Southwest. This one looks interesting. ORA. The monthly looks very, very good. Looks like it's been trading for a while. This little burst right here got sold out. But then don't look at it as a bad thing that it came back down. I would be looking, I would be following it for the next few months or even a few weeks only, just to see what it does. If it continues going downward, I might just average in. If not, I'll be interested to see what it does from here because this is the month. And as May ends, I want to see if May ends. You see each candle here represents a month. So you see when it bounces off of this 50 average, right? It hovers there for 2 months, 3 months before it takes off. So we got some time. Let's monitor it. See here, comes back to this 50 and it spends a few months in there. This right here was actually like maybe like 6 months or something. You have time. If this thing takes off again, all time high was 128, almost 130. Yeah, that's double, almost double what the price is right now. The structure looks good. I like the structure. I don't even know what to do, but just from looking at the structure, to do energy, recover the energy, geothermal. Okay, looks good. The good thing about them is their earnings is positive. Not the best earnings, but their earnings is positive. Charts charts looks good. Looks like a setup for future number of years, say 5 years. See if they have anything going on with the options. Options have good spread, which the spread's kind of bad. It's also part of a stock that nobody really plays. That's why the spread's so bad. But chart looks good. So rating between 1 to 10, 1 being the weakest, 10 being the best. This will be an easy 6. Easy 6. Almost a 7. Only thing that would prevent it from being a 7 or even higher is because the structure is good. The company has some earnings. It's just there's only one real way to play it. You get the stocks. You can get the options, but the options the spread's so bad. The spread's so bad, so you can't even get any credit for it, any decent credit for it. Um, what is that? If you're gonna straight up getting calls and puts, you're gonna get killed by the spread too. So there's only a real way to play this is just to buy the shares. Kind of sucks. APH, if I remember correctly, this is a healthcare. Oh no, APH is information technology, sensors, antennas. Wow, they have a dividend almost 8%. It's crazy. Structure's been really well. People who are interested, look at the structure. Even if it comes back, you have that the confidence of it being this old and having this kind of structure. Like, this is a prime chart of what you want to see in a stock. I think it's just been doing well. You compare the big ones. I mean, we could look at on same chart pattern. Chart pattern. You see, just looking for that same pattern. What was the pH? Not too expensive. $60. Really good. Good ratings for me. Let's see. Let's see if it spreads. Says okay. Not the best. So easy 7 again. Wish this one why is the easy 7s because they also pay dividends. So there's dividends. There's the growth of the stock. The only thing that sucks is there's no options. 7. Chewy. I think this is the Chewy bar. Oh no, this is pet food. Is that the Chewy bar? Pet bar. Pet food. No, this is the start of a good looking chart. It's a pretty new stock. You see, it's come back. The first few years of a stock, you don't really know if it's going to be good or not yet. It's only after it taken off and gone for a certain amount of time that it's really good. How you know? So this one, keep an eye on this one. I think it has the potential. Setting up for the structure is setting up. Has potential. JD. Now I've been hearing so many people talk about this. JD, and a lot of news articles, a lot of news plays talking about JD. JD. It's a Chinese stock. Yeah, e-commerce. So something like Amazon but for China. I think they're owned by Alibaba also. So this pattern, if it's coming back, this I know price is looking ugly right now, but this is when You want to be looking for deals. So right here, if it comes back to 50, it'd be good. It has with this, the thing with the stock is it has a record of going down low. You know, it's not very well liked. Doesn't keep its gains really well. So if it comes back to 50, I'll probably watch it and see if it comes down to maybe 40 or 35. You know, so this whole range, you could probably take out this whole range back before it comes by. It goes up again. You know, it's just the way that the pattern of the stock, just the way it moves. So it's an easy play. Now, one stock that I haven't heard about, I haven't heard too much about, but it was pretty hot when it first started. Was lemonade. Now, I think there's some potential here. Lemonade, if I remember correctly, it's like a peer-to-peer money lending, loaning. So it has potential, especially with everything going online now, and nobody really likes dealing with bankers and getting the loans from the bank. Peer to peer, it has potential, and I want to see where this really goes. It has the monthly chart has the potential to be good, and this was all hype when people were hyping it up and everything. It came down. Wonder if there's people real interest in it. Interest of real interest being people who are interested in the long term growth of this. So if they are, it's a great time to get in. It's really close to its IPO. IPO was around the 40 50 mark. Right? IPO, yep, $50 was when the IPO. So it's 69 right now. So it's $20 off from its IPO price. And so, I mean, one thing I think that could happen with lemonade if it could probably even dip even lower, past 50. And if people are it does pique the interest of people, we'll see it keep going. If not, it could just die off. And that's the scary thing about IPOs, stocks that just recently IPO, is you never within that first year or two, you never really know what it's gonna do. It could get so hyped up the first year, and then all of a sudden, everybody leaves it and never gets that traction again. Or it could just, never return. It gets all that hype, comes back to its IPO price. People are really, really interested in it, and then they continue to buy it off. An example of that is, I think, meat. Beyond Meat is still, I think it would still be a pretty good play. But you can see, IPO down to the 50s. That stock took off to 240, came back down almost to IPO prices again. People are still catching it, and it's still hovering. Right? So it has the potential to come back. Beyond Meat, you just gotta, really, really monitor it. You know, if it can make it past that first like year or two and still catch, stay above its IPO price, I think it has the potential. Like this one, Beyond Meat. A number more years before it catches, traction again. But if it does, don't sleep on it. It's, oh, snow, snowflakes. Right? John been mentioning that snowflake. You know, things like this. They go beyond there. They go to or below their IPO, and then if there's people interested, it'll stay above their IPO price. It'll come back above. So just monitor Dash. I think Dash was doing well. Or Dash. See, so you see IPOs, they all go like this. The people hype them up, and then they come down, and then, you know, They just gotta attract. They just gotta attract the the big investors, people who can put their money in there and forget about it. Because that's how a stock will, keep its value, right? People are putting their money in it and they're putting it in there for a number of years, and the stock is not going to fall in value. But if people are just, day traders, day traders don't really make the market do anything. I mean, they make it go up and down a little bit here and there, but what we really need is the big investors to come in and just stay in. Right? So IPO stocks like this, it'll be a number of years. So if it comes back to or below its IPO price, just monitor it. If you're noticing that it's keeping above it, but it's just lagging a little bit, just give it a little bit more time. Because if we even look at Tesla, right, at the beginning days, it really didn't do anything much the first few years of its existence, right? Zoom in. We gotta really zoom in because it Tesla really took off. The first few years of its existence, Tesla really didn't do much. You know, it was just a little up, a little down. In 2000, this is all the way back in 2010, just a little up, a little down, sideways for a little while. It took a number of years. So that first year, second year, third year, it's holding. It was holding its price. It's holding above its IPO price, and then eventually it just blows up. So if you're patient with it, look at that, and it'll be an investment that pays itself 10, 20 times over, right? Because what was it? Tesla did a was it 5 to 1? So they originally IPO at 15. So this three here, this has been changed because it was reflected the split. But if I think it only done one split, and that was last year. So 5 for 1. So that was its IPO price was 15. It's never $3. It was 15. But if you got in there, right, $15, you get 100 shares of Tesla. Where would you be today? You didn't even have to buy anymore. Just get 100 shares of it. Just hold. Tesla, snowflakes. One stocks that One stock that I have high hopes for because I've been playing these guys for a long time is CHGG, and it's coming back down. It's coming back down, but I have really high hopes for it because why is that? Because I played this stock since it was $20 back in 2018, but it was $20 and it just kept going. So you see the pattern and a number of years where it didn't really do anything, but it just exploded. So I've been playing. I've been in since it was $20, all time high. So that was at its all time high. That was 5 times my investment already. It's a short 3 years. GG, Oracle. Oracle is another good one. Not a big mover. Well, it didn't used to be a big mover, but stable. If it ever comes down again, could be good. Planet Fitness. Planet Fitness, I really like a lot. They have a good business model. They keep people right here. See, it's because they cater to the average person. I mean, I know gym rats don't like it because Planet Fitness isn't. I think of it as a business model. Now. They really cater to people who average people. You know, cater to them really good. So give people just what they mm, just enough of what they need so they can continue making money. Pattern's looking really good. It would have been great to pick it up last year when it crashed. It never came back that low again. And now, if this is another dip, right? Another dip. This is the dip. If it can hold above right now, if it can hold above like 70, just stay above 70 and it just keeps going. I think it would be great. You know, this thing could just keep on going up and above. It just keeps going. It's a rocket ship. Slow rocket, but it's rocketing. Come back in a come back in 3 years or something. Look at it, unrecognizable. Kind of like Micron. Micron. You know, people. I don't know who around here still remember Micron when it was only a $40 stock. This is when I was playing it. $40 stock, and who would have thought came up this high? I had the patience back then. And it looks like this is a start of a dip. So hopefully this dip continues to go down a little more. Give myself a good opportunity. Let's see. Let's see what the scanner picked up today. These are stocks that are I made a little scanner that would try to find stocks that are like good to play right now. It's never that easy just to make something that can pick something for you to play right now. But sometimes you stumble onto some decent ones. Silver. This is one silver stock that's doing this. Right? It came down some. I think all silver stock may be following. So I don't know too much about silver and gold and stuff, but probably dig into it. I know that when the market goes down, silver stock and gold stock like to go up. Yeah, stocks in this under $40, $50. There's not that many good ones that really piques my interest. Skechers, they're still around. Shoe brand. Looks like they've been doing well. Not the best, but if they're breaking this multi-year range or 43, stay above 45. They stay above 45. I think it'll just take off. I want to see that. I want to see it take off again. See, last time I had a multi-year range here. It broke out. So from 12, $13 right here. Shot all the way up to 50. So multi-year range here, 40, 45. Right. So in this range, multi-year range here. If it breaks out here, say if it could double itself, put itself up at almost $90, 90 to 100 that range. Good pickup too. A daily pickup. Pick up on the daily. It gapped it up. It's just in at the beginning of May, gapped up. Come back down. It's good. I think it's gonna might retest that 45. Or already looks like it retested that 45. Skechers SKX. Add that to my watch list. Good stock to keep a track. Keep track of. Especially it's a multi-year range break. Here I was saying $50 stocks don't interest me. I just found one right out of the blue. Hypocrite. Most of those stocks pretty. It's not much. It takes a lot of time for them. It's right here. TRP, Trans Energy. Trans Canada, the multi-year range between, let's just say between 50 and 50 and 40. Let's mark that off. I want to see. I want to follow this. Continue to follow this stock to see how it does. If that breakout happens, you see it double itself to $100. See what do they do. Energy. Okay, I like it. I like it. Uh, Option kind of bad. Not the best spread. Why I always look for this is if I want to be a shareholder, I want to get some rental. I want to get some premium back. It's hard to get any premium with this stock. So there's only, I mean, this could just be a breakout play. I don't. It looks like they have a dividend too, pretty high dividend. Let's see how much that is it. 50. They're already paying out. 'Cause there's the little dividend thing right here. They're paying out like 60, like 10%, even more, like 12% or something. It's been increasing. Looks like it, but it kind of looks. It's not really increasing. It's kind of irregular. Yeah, sometimes it's a little higher, sometimes a little lower by a few cents. It's irregular, but this would be a range breakout play. TRP. Gotta make a new list. I'm coming. My list is stocks right now. We filter everything. Take a few days. We filter everything. CRH. Steadily increasing. Look like a multi-year break, multi-year range break. Starting a new trend, maybe to retest all highs from 2008. That's a long time. Bog Warner. Not sure what these guys do. Potential interests. Potential interests is consumer. Oh, they do EV also. Okay, interesting. The stock looks like it's pretty interesting. So PWA, so that we continue to watch it. PWA. Dan Danbury Energy. Energy stocks are sometimes they're consistent. Sometimes they're consistent. BK Brown. Brown's doing well. Let's see is let's end the night with the market watch of today. So you see everything was green today. Compared to Tuesday when we looked at everything was like mostly red, right? So let's um, its heat map because you can break it down. So the S&P 500 1 day performance, the same as what we have there. Well, what Thinkorswim doesn't have is we can do it. We can break it down into a week. So the weekly, the last week is still pretty red compared to normal. The last month. So when you break it down like this, you know what sectors you can look at and see what sectors are really hurting. what sectors are doing well. So basic materials are doing well. Industrials are doing well. Energy is doing well. Healthcare is doing well. Financial is doing well. So basically everything on the outside here, which is different from last year. Because last year, if we look at performance, even, see, I don't know, year to date, year to date, no, it doesn't show it anymore. But last year was different. Last year, what was happening was last year it was these ones that were all green. So this sector right here. So it was technology, communication services, and then uh, consumers cyclical. That was doing really well. And so we're just seeing a rotation of money going from that's been pumped into technology, uh, communication services, into back into the other ones, the other really the other lagger or the other sectors. And you're gonna see this back and forth. You're gonna see this, and this is why it's good to look at a heat map and just to follow it so you know what's happening. 'Cause, the money's not really going anywhere. It's just going to different sectors, kind of balances each other out. So one sector just can't do super well for a long time. Eventually, they come down, and then that money, those traders or those investors, and that they put it in somewhere else. They want their money to continue to grow. So it's a good way to see that. All right, thank you everybody for joining me tonight. Um, since I missed yesterday, I just wanted to come on tonight and look at everything. Yeah. All right. So everybody have a good weekend. Stay safe. Um, and we'll see you guys next week.